Welcome to Markets Now. I'm Michelle Rook with Craig Turner of StoneX and a higher day in both grain and livestock futures trade. And Craig, let's talk about kind of the combination that came together in the grains. We had some technical buying off support, but we do have demand helping to push this grain market, don't we?
Yeah, we absolutely do. I mean, even Tuesday morning we saw the USDA release their export sales. China, it was actually Mexico buying over 300,000 tons of corn. And we saw in the past couple of days too, on the trading days, we've been seeing sales in all the major commodity market or grain and oilseed markets, whether it be soybeans and corn and wheat. So there's that we're oversold. You can make the case here that we may have put in some harvest lows. Usually, when you get to 50% on the completed on harvest, you tend to put in a secondary bottom seasonally. The first one coming in usually around the end of August. The second when you get past 50% on the harvest, and the corn harvest has gone very fast this year due to the dry conditions. So between, let's just say, being oversold, the seasonality of the harvest starting to kick in, plus some demand. And there are people that were concerned that we might not get this demand, and we've been kind of lagging. So it's real nice to see. It's a little bit of a relief rally here, and we'll see how far it can go.
Yeah, so how much upside is there? Because obviously we're trying to also correct our oversold status. So how much retracement can we expect?
Yeah, so I mean, for corn, we've gotten back up to the 430s recently. We'll see if we can get there. Beans had a bigger rebound because of the weather in South America had been dry. So I don't know if we're going to get back up into the high tens again, but we certainly can make a run into to the mid tens. On the wheat market's also kind of tight. Russia is talking about price floors. So when you take a look at, let's say, wheat and corn, you can get tighter much faster, not just in the United States, but definitely globally in the world export market. So I'd be looking for corn and wheat here to rally and challenge some of the resistance levels. I think soybeans is tough, especially when we're 2 weeks away from an election. And if Trump wins, which apparently he's looked to be maybe the odds-on favorite, as a small favorite, but definitely a favorite in some of the betting markets.
Yeah.
And if that's the case, I mean, we all remember 2018, and who knows how things go, but it's all fresh in everyone's mind. And with the big South American crop and the lower Chinese demand, and we may be going back to the phase one, phase two um, trade negotiations, or maybe something completely different. So I understand why the rally in soybeans may be muted or capped a little bit, or end faster, just because of that.
Is basis firming? That's the other underlying signal that we get in terms of strong demand, right?
Yeah, absolutely. Actually, the basis has been a very nice bullish surprise for the corn market. Just something like December versus March which was about 18 or 17 cent carry not too long ago. Was about 12 or 13, even strengthened again on Tuesday. So that is usually not the case during harvest. Usually the basis is neutral, maybe even bearish. We're also seeing the wheat basis starting to improve, especially higher quality wheat. So whether it be spring wheat in, let's say, North Dakota, or even that Western Canadian wheat, that red wheat in the prairies there, those basis and cash prices have been rallying during harvest. So something's definitely going on in the corn and the wheat market, whether that be local demand or it's export demand, or maybe, who knows, maybe the production is not as large as we thought it was, but there's the basis and the spreads are showing us here that there is demand, and it's something we got to keep an eye out for.
The other wild card when it comes to demand is still China. They continue to throw stimulus at their economy, cutting interest rates again this week. Is it working, Craig? And do you anticipate that it is going to lead to some demand coming over to the US or not?
So there's two types of demand. There is more of your, what you need, and then there's also discretionary. And on the food side, on the agricultural side, a lot of it is inelastic. Like if they need a certain amount of meal for the population that they're feeding, whether it be for hogs and feed, that's going to be kind of fixed or within reason anyway. So if China's able to get a lot of their, let's just say, feed component from South America, namely Brazil, that even with the stimulus, that that may not let's say change numbers too much. I think on the energy side, if you do have a roaring economy, regardless if your population is increasing or decreasing, and right now China's population is decreasing and they're getting older, which is not great for protein demand. Could you see a bump in this in terms of overall manufacturing, consumer demand, energy demand? You could. So and also would also help shore up their real estate also too, most likely. So that kind of stimulus, maybe it's a little bit more in the discretionary part and the energy part and the manufacturing, but hopefully we see some spillover into ag.
It felt like a risk on day in the ags today. Some of that was kind of because crude oil had a big rally, and that really did also support corn and soybean oil and beans, didn't it?
It absolutely did. We saw a nice rally in crude. That's going to bleed over into the soybean oil, and the soybean oil market was strong today. We saw corn. Corn was up on the, also on the exports too. So listen, when the energy markets go up, there's a distinct link between energies, grain and oil seeds, and livestock. They all in some way kind of support or, feed into each other. And it certainly did. And the other thing too is when you take a look at the last NOPA crush report, we had record crush and soybean oil stocks were the lowest we've seen all year, which is just going to tell us that renewable biofuels is strong. I know it kind of got a little forgotten there. We had, the big peaks and certainly a low valley recently, but that demand is coming online. There's more and more crush coming online. Renewable biofuels and biodiesel isn't going away. And for 2024 and 2025, that capacity and demand is going to keep on growing. So I think corn for ethanol is stronger. Soybean oil and the energy market is certainly stronger. There's going to probably be a question of what do we do with all this meal, and we're going to be actively looking for ways either domestically or internationally to market that. But yeah, I'd say all those markets work together, and the energy component certainly helped.
What about the funds? Do they want to be flat going into the election because they got out of their short position and then kind of went back into part of it anyways?
Yeah, I'd rather be neutral heading into the election on soybeans. I can understand having a small short position. I'm going to assume they will, just knowing what happened last time around. But I mean, if for corn and wheat, I'd actually rather be long heading into this election. I just think that corn is going to be trading 4 to 5.25 this year on a normal stock to usage or an adequately supplied market. Wheat to me is more of a $5 to $7 market, and we certainly. I mean, right now Russia is already putting in price floors, right? They're or trying to at least at 250 a ton. It's only October. I mean, we just harvested a massive amount of wheat in northern hemisphere over the past few months. So I think there are some bullish signs, not just some of the price action, the export demand, but also in the supply and demand picture. But yeah, heading in, it's such a huge wild card, and usually when there's going to be an uncertain event, whether it's a regular speculator or even someone with a lot of money like the funds, they tend not to get heavy. Like the uncertainty usually means we see a little bit of a pullback. So I wouldn't be surprised they're short, but I would look for open interest and also the size of the position to get a little bit smaller between now and the election.
Specifically on wheat, Russia and their export program is really a big part of what's influencing that market. But even we start to see their exports slow down, does the US get demand out of that or not?
They really should. So, you know, Russia is the largest exporter of wheat, and they also like to have as much market share as possible. And what Russia tends to do is undercut the market and sell out everything they possibly, sell as much as they possibly can. And at some point, the Russian government steps in and says, "Hey, we're selling out too much. Russian flour prices are going up. It's hurting us domestically. We either have to put in, quotas or raise the floor or do something like that." And when the years when Russia have done that, historically, it's when they're projected to be under 10% stock to usage. And if you look at the last WASDE in the major exporter section of that report, Russia's projected to be under 10% stock to usage by the end of the marketing year. Now, that's not until May or June, but it's October now and Russia's already seeing that. Now, when you take a look at the other major exporters, who's going to have exportable wheat this year, that where the USDA hasn't already allotted it to go out. The only other country that really has it is Kazakhstan, but they're the smallest of the major exporters and really don't put a big dent in it if there's a big swing in demand. So it's really the United States. So we call wheat this year, it's known as a show me market. You have to show me the demand.
Thanks so much, Craig Turner with StoneX. That is Markets Now.